Hi there, everyone. This is Steve Miley for FX Explained, and here we are going to be talking to, dare I say, the legendary Jack Schwager, the writer of the Market Wizards set of books. But we're going to talk a little bit about that, and we're going to talk about some of the other projects that Jack is doing. He's a hero of mine. We just spoke off camera there, and certainly changed my life. Certainly changed my life in reading those books back in the early to mid 90s, and kind of altered my course and gave me a lot of insight to when I was a broker, and then went on to research, and then finally into trading of what it's like to be on that trading side. And they were certainly influential, and changed my whole approach really to how I looked at markets and re-energized my passion. So welcome, Jack. How are you today?
Thank you, Steve. I'm doing fine.
Good. So, well, just give a bit of a background in here for Jack in here. He has been a director of futures research for some of Wall Street's biggest names, particularly Prudential Securities. He's obviously the author of the Market Wizards books in here, most recently with the Unknown Market Wizards, the best traders you've never heard of, and is also currently championing Fund Seeder as a co-founder. And we're going to touch on all these aspects of what Jack has experienced in his career, and hopefully it'll be useful for all you guys out there. So my first question for you, Jack, and this one I know you've answered, I've seen you answer this before, but just for our viewers, it's been well documented, but what traits do you see commonly across all of the many traders that you've interviewed over the last year, over the many years, and also those traits that even the guys you've not interviewed but you just worked with?
Okay, so first of all, when it's traits, they're not personality traits, because people are all over the board. They could be aggressive, they could be quiet, they could be ego driven, they could be modest, they could be whatever. I mean, it could be right wing, left wing. They're all over the place. So
yeah,
there's no commonality in that. The traits that matter have to do with trading, and I should say that really, I've been on 5 Market Wizard books. Those books are really all about what they're about is what are the traits of these people, what makes them different. But some of the key things that come out repeatedly over and over again is a message that for these traders, with a very rare exception, risk management is the first and foremost thing of importance. It's not the methodology. It's not finding some great secret in the markets. It's really about, well, you have to have a way of making money. They have to have a methodology that has some edge. But ultimately, then, when the trading process, it's all about, or almost all about, risk management, making sure you preserve your capital, making sure no single trade does any severe damage, making sure you're always in the game. That's the respect for that, the respect for the importance of risk management is a great unifying trait, so to speak. Another one would be, well, obviously, being a good trader. It's no surprise most of these people are very disciplined. I think I'm not sure the exact number. There's probably 3 or 4 of the people who have been Market Wizards in my books have been ex-Marines, and I think that's no coincidence. It's because of the discipline they get through that experience. One in the most recent book, Unknown Market Wizards, who here's a guy who in high school kind of didn't flunk out, but let's call him generously a C student, and had no career path, and really had just never, kind of screwed up whatever he did. Went into the Marines and kind of changed his life. So, but ultimately, he attributes a lot of success to that and the discipline he got from that, and so forth.
Sure.
Other traits, flexibility. So, if you're wrong, not to kind of hope, insist you're right, the market's wrong, I'm right, that type of thing. But flexibility, that if you recognize the ability to recognize when you're wrong and to get out of a position, and in many of these cases, the traders smart enough to actually reverse their position. So and that's why I think people who are very rigid, people who are very dogmatic, people who, I think people who are if you use a political example on extreme right or left wings, I think would make lousy traders
Yeah.
because they're never open to the other side. They're never open to where they might be wrong. Anyway, that's actually, and ironically, I haven't mentioned this in any other interview, but I pissed off apparently a lot of readers, and not a lot of readers, but some readers in the unknown market, was because I had one line, which was I thought a humorous line to make that exact point. And it seems that extreme Trumpies just have no sense of humor. And what I basically said was, I said this, I said, I even said in the beginning, I said, politics aside, Trump would make a lousy trader because he's never admitted he's been wrong.
Yeah.
And that just that drove some readers crazy, None of them, by the way, I mean, they were pissed off enough to give me a 1-star review because of that line, but none of them, and for that, they would even say, well, the book was really good, but how could you insult Trump? It's like insulting God. It's like sacrilegious. But none of them gave me an example where he ever admitted he's wrong.
Yeah.
And my challenge would be to anybody, tell me when he's ever admitted he's wrong. And so my point is, I would bet that he would be a lousy trader because he can't admit he's wrong. So it's I meant that in jest, but apparently it didn't go off to some readers that way.
Well, it's really interesting. A couple of things you said there. One is around the discipline, and I know that as one of my roles over the last 10 years certainly has been on the education side. And I've had quite a few ex-military people come in who have turned out to be very successful. And as you say, that discipline that comes from the military. And correct me if I'm wrong, quite a few. There's a definite number of the turtle traders were ex-military or military, as I remember. Did quite well.
Of them were. Yeah, I don't know about the turtles themselves.
Right.
I can't think. The couple of traders I'm thinking off the top of my head that were ex-military were not turtles, but some of them perhaps might have been. I don't know.
Yeah. And then also you mentioned right off the top there about risk management, and again from my educating side, that's something that we really push hard on, the risk management. Regardless of how you get into the trades and decide to get out of them, it's managing that risk. And something that I've taken away from both your books and from traders that I've worked with and sat with, various investment banks over the years, has been this. There seems to be kind of a personality trait or some two traits that kind of don't sit usually together. And it feels to me that these guys and ladies, are, when they're right, they become very aggressive and confident risk takers when they know they're right and they're confident and things are moving their way. But then equally, they are very, very risk averse as well, because as you say there, when they're wrong, they know they're wrong and they'll get out, and they don't like losing money. Tudor Jones, I think maybe even from your book, he says, he never wants to have a losing day, and and is always looking to cut positions quickly and early and get out. Soros also says, I'm no better than the next man, but I'll just cut my position quicker, kind of stuff. So it seems that these they almost don't sort of fit together. You did one of those banking psychometric tests whether you're more of a risk taker with your investments or you're more conservative and cautious. With a lot of these successful guys, they seem to have both of those. They're risk averse but big risk takers, all within the same person.
Yeah, but that's correct. So somebody like Druckenmiller, who worked, with Soros and ran his funds for quite a long period of time, when he was often, when Eastern Europe was kind of coming out of the Soviet, the Soviet bloc disintegrated. Sure. So he was spending, he spent, I don't know, a decade or whatever, trying to turn those countries more capitalistic and putting his attention there. So it was Druckenmiller who was running the funds, but Druckenmiller, of course, well, he was a great manager, or is a great manager on his own right. He's retired now, of course. But he did learn from Soros, and he said one of the main things he learned from Soros was, he learned to be a pig when you're right. In other words, when he relates a story where he went into Soros when, in his earlier days when he started working there, and he was giving Soros this whole pitch, and this was kind of around the same time, I think, of why the then the D mark, because it's pre-euro, why the D mark was going to go up, and he was very confident in it. And Soros says, "Well, how big of a position, do you have?" And he said $1 billion. And Zorro said dismissively, $1 billion, you call that a position? So that's the extreme other end of it. The point is, when you're super, super confident like that, you should really have a position. Or the story that Druckenmiller told, which is kind of neat, is Soros, when he had the Plaza Accord. People don't know the Plaza Accord was where the U.S. dollar had been really strong, and there was this meeting, and instantaneously it changed everything. And overnight, European countries went crazy, and the Japanese yen, and everything else against the dollar. And so I think the yen was up like 600-700 points overnight, and Soros has his traders outside of his office selling, and he runs out, "Stop selling the yen." He said, "I'll take all your positions. You don't want them, I'll take them." And Druckenmiller said that Soros said, "Hey, the central banks have just told me that the yen's going to go up, for a year or two. Why do I want to sell it on the first day?" So that's a great example of kind of the aggressive side, through Soros and Druckenmiller. But still, on the other side of that is the conservative side of getting out quickly when you're wrong. Like some of the traders in this Unknown Market Wizards book sort of specialize in event trading, so they may do a lot of work, a lot of preparation. They've got their finger on their mouse, and when the central banker says something that they're expecting, and they got the order, it's a big order, they take a aggressive move, but they'll be out in less than a minute if it doesn't go exactly the way they think it's going to go. If that reaction isn't the same, they'll be out. And if we're worried for that, they'd blow up a million times. But they have to have, and there's where discipline comes in again. They have to be able to have both the combination of risk control and discipline to prevent that. At the same time, they're taking very aggressive positions. So while they may seem contradictory, they both operate together.
Sure.
By both, I mean both by being aggressive when you're very confident, and by being very risk averse.
Yeah. And in the old market adage, it's, run your profits, cut your losses, right? But that's in having it right in action. So another question. So you got a book out fairly recently, Unknown Market Wizards, the best traders you've never heard of, published last year, if I'm correct, in 2020. Did you see anything in that book of the traders, these guys, these retail guys, that you've managed to interview, that are kind of that's different these days, that you would have seen from those? Because the older books, they were more concentrated on institutional guys, right? So we spoke again before. You spoke to Tom Baldwin, the king of the pits in Chicago, but who's an individual trader, obviously. But a lot of the people you interviewed were like institutional hedge funds, or the precursor of hedge funds, the CTAs, or they were investment managers. What have you seen in these from the new book? And is there any differences again in their approaches, in the personality traits, or is it just kind of echoed through the books?
Yeah. Well. First of all, I mean, there were individuals in the Other Market Wizards book too, but there probably were a little bit more hedge fund types than individuals. Well, there were individuals. This one, the focus was solely on individuals. Yeah, a lot of the traits do kind of overlap, but you do have some interesting things. This book, for one thing, actually, you've got a trader in this book that was using a methodology that would be outside of the definition of anything in any of the former books. So this particular trader, a fellow by the name of Chris Camillo, doesn't use fundamentals, and he doesn't use technical. Now that would if you said what traders have you interviewed that don't use fundamentals, it would be zero.
What's left, right?
And I would have said, well, what kind of stupid question is that? I mean, what else is there? Well, apparently Chris figured out there was something else.
Right.
And so he literally does not use fundamentals, and does not. He gets bored with all the statistics. He calls himself like attention deficit. In that, by attention deficit meaning that something that doesn't interest them you can't focus on, right. But you can focus intently on something that does interest you. Sure. And so the technical just didn't work for him. But he had this kind of personality of always looking for kind of social trends. And so what he ended up doing was using social media to identify trends before they actually would appear anywhere else, including earnings. Right. So, and he eventually built a company that had the software to analyze this and catch it early. But initially, he was doing it just by hand, virtually. Right. He had like phrases he was looking for, and looking for for those phrases in relation to a company, to indicate whether people, there was some big trend going there, so he would spot these things in social media. Twitter was a big thing, but others. And that was his way of trading. And he wouldn't care. He wouldn't even look. He wouldn't care where it was. It was, as long as it was big on social media, he was in the stock. And as soon as it was kind of disseminated, or cooled off, he was out, and he didn't need to even look at the chart to do anything, and he didn't know the fundamentals per se.
So that's definitely something kind of new that you kind of touch on there in Unknown Market Wizards. Yeah, very interesting. Yeah, as you say.
Yes. So that's an example of the difference. But when it comes to stuff like risk management and all that, those principles are time invariant. I read, some of your listeners probably familiar with a book called Reminiscences of a Stock Operator. The book was
of course
65 years old when I read it, which is quite a long time ago. It's now, I think it was written in the 1920s.
Yeah, I think so.
So 100 years. But anyway, and I was kind of like marveled at how, even though this was about bucket shops and things that no longer exist, at the time, even at that time, and it was still, totally relevant in some of the phrases have been written that day, in terms of markets. And so that's certain principles about what makes good or correct trading and what makes bad trading, those things don't change. And we've gone through enormous changes, computerization of the markets, the pits of it disappeared. It's all electronic trading. We've got, your cell phone now has more power than the IBM mainframes had, and there's now all these quants in the markets, and you would think everything would have changed turned it upside down, but still, it's still the basic same principles.
Yeah, well, actually, that kind of segues right into my next question, which is, we have had this surge with computerization and then more strategic automated systems, algorithmic trading. It's been a big part of the industry for at least the last 10 years, really the last 15 to 20 years. And now we're on the verge, and I've worked with some partners doing some work on the actual artificial intelligence and machine learning side, which is taking that to even a more, to more of an extreme. And you've kind of touched on this already, and maybe answer the question. But do you see that changing? These underlying traits, these underlying impacts really on the market, or do we kind of, does the human become irrelevant, or do you think that, and it's very much an unknown quantity, right? But it would be nice to hear your thoughts on that, where we're going with that.
Yeah. Well, I like to use the analogy with chess here, and show how markets are different. So, and I'm gonna reference here Adam Robinson, who's kind of he has a lot of insights, and people may want to look him up online and stuff. And he has this. I heard him on a podcast, and he had this brilliant narrative comparison. And by the way, he's a chess champ. He's a master.
Right.
He trained with Bobby Fischer. He was as a master level trained chess pro, like 2200 or whatever. Wow. Not that he actively plays anymore, but he was a chess master. Is, I guess, still. Anyway, but he uses, there's a brilliant example about chess, and he said, and this was a couple of years ago, but he said at that time, he said not that long ago, the computers couldn't beat masters, and then in a few years they got to the point where they were so far beyond chess masters that no chess master would have any chance of beating a computer. But he said, but here's what the interesting part is. So I knew that part of it. What I didn't know was this. He said, what was amazing, though, was that if you go and you start looking at, then they came up to the next generation, where instead of learning from, looking at all the great games, all the games in history and everything, and having the computer learn from that,
Sure.
they then started programming the computer not to know anything, not to look at anything humans have done, but to just play itself billions of times and to learn from that. And that's how the program got. So that program became way stronger than the original Deep Blue program, the IBM program that originally beat was a Karpov, I forget who, but or Spassky, I forget which chess master.
I think it's Spassky, Deep Blue,
Spassky or Karpov, or one of them. But anyway, this one then ended up, trouncing the other one, and because he said it started playing alien chess, and now, and this is like sticks. I'm not if anybody who knows anything about chess. So, one of the things, as a chess, you try to protect the king, and it turns out that in some of these winning games, the computer would move the king into the middle of the board, which is something, if anybody was teaching a rank amateur, you don't do that. You never do that.
No, you never do.
That's the way it won. And so he called it alien chess. So he said that's scary. And that is scary because, wow, really, it's coming up with things that we can never imagine. So how can you possibly compete? So that's the negative thing. Okay, that's the negative side. That would say we're all doomed. There's no way, AI. However, there is, and here's the thing, there's two important differences between chess and trading markets. In chess, well, first of all, there's a limited number of pieces, there's a limited number of moves. In markets, you've got just like thousands of different elements. You have all the different major countries, you have different economic policies, you have also all the different companies, you have different policies, you have a million different things going on. Okay, so it's a lot more variables. But that's not the big deal. The big deal is this, that in the markets, the same factors don't always work the same way. They can even work opposite ways, and it's not necessarily predictable. So, the queen is always going to move the same way. It's going to move, going to go diagonally, go horizontally. That's not going to change. It's always well defined. However, interest rates going up, bearish or bullish for the stock market, it depends. Sometimes a rising interest rate market will go for bullish stock market, sometimes for a bearish stock market, sometimes it'll be irrelevant. And you apply that to everything that affects the markets. And so that makes it much more difficult, because it's not like it can learn certain rules and then keep applying it, because, hey, every night somebody can come in and change the rules. Hey, this
you have like
this doesn't
Super
mean
King or Super
exactly
Queen,
So so I suspect that we're not on the threshold. Now AI may become and probably is in some quarters a profitable way of approaching the markets, and there'll be AI programs that can do very well. But I still think there'll be a place for humans for some time. So anyway, that's a long answer to your question.
No, that's a really good answer as well. Yeah, and I hear you. There are, as you say, there's millions, billions of different parameters, and the rules can change. Anytime. When does it become
change? Makes it really tough. Yeah.
So it's like the queen becomes super queen and can fly or something like that, right? So it's interesting.
It would be like what, the horse moving horizontally? I didn't know it could do that. And so that makes it more difficult.
So I've got one final question for you in here, Jack. So I want to talk a little bit, and you can educate me actually in this and our viewers in here about FundSeeder. And it's something I think some of our viewers will be really interested in. So the project is at fundseeder.com. But tell us a bit about what you're doing now with that.
Sure. The concept, basically underlying principle and concept and the whole founding of the company was to sort of globalize and democratize the asset management business. I mean, that's the long-term vision. So the idea was initially to establish a trader platform that would have good analytics and graphics, so traders can can link their accounts, and they can see their equity curves. They can see their, their underwater downside curves. They can see all sorts of stats, and they can even do technical analysis on their equity curve and stuff like that. But basically provide a performance information platform for traders, and provide it for free, because we're not going to make money selling subscriptions. That wasn't the model. And the idea was to, just attract traders to the platform. And then to have a separate company, Fund Seeder Investments, that would then have that database of traders and could see, because one essential part of the platform is that traders can link their accounts via their broker. Not every broker. For those who can't, we have a template they can upload their spreadsheet. But for those who can, the results become kind of automatically verified, because you're getting results through the broker. And also the trader doesn't have to update it daily. So anyway, and the idea was that Fund Seeder Investments could then use the database of Fund Seeder Technologies to find superior traders, and that would allow it, so traders. And here's a good example of a trader who's in the book. I found him because of Fund Seeder is a good example, of that. So he's in Undiscovered Market Wizards. And he's the paragon, or the perfect model of a trader that in a billion years would never get a penny allocation in the conventional world.
Yeah.
So this is a guy who's an ex-bellhop.
Wow.
Got interested, saw all these rich people in the hotel reading the Wall Street Journal, said, wouldn't that be nice to live like that? And started doing research and came up with a methodology, which ultimately, first time, his first attempt failed, but the second time around, he developed a methodology to based on trading on earnings. He only trades on earning days, trades just large cap stocks, but he doesn't have much money. So he never had much money. He always has been trading, but every year he kind of makes enough to support himself. And he's had, I spotted him because I noticed this fellow with this East European name kept on popping up. Every time I looked at 2 of the top 10 traders.
Yeah.
And then I called, several years ago. I said, "What's the story?" And it's just who he was. And so that's the backstory. And so he has he doesn't make money every quarter, but almost every quarter. And he's not. I don't think he's had a significant losing quarter ever. He's been doing it. His track record goes back in 10, 15, well, more than 10 years, more like 15 years. So anyway. So here's a guy who would never get any money, right? I mean, no way. What, a bellhop? He graduated high school with not particularly good grades in the Czech Republic. I mean, you're going to get one guy working out of his office. You're going to give this guy money? No way in the world. Yeah. But our model is, we'll set up the structure. We can find the traders. We can give them a managed account to trade. And they could have an opportunity to manage money. They don't have to do anything different. They just continue to trade their own account and our account like they do their own. So it becomes a way for people who would have no access to. All they can do is trade, right? Yeah. Which is I'm being a little facetious here, because they don't have the Princeton background. They don't have the credentials. Sure. All they can do is money trading, But that's all we're looking for. We can make money in a risk-controlled way, trading, I should say. So our idea then is to then find these traders, and then then through, the first vehicle will be a multi-trader fund, which is in the process now of, the documents being drawn up and everything. And we do have a partnership in the works with a major European institution, which until it's announced, I can't, say, anything more than that. But bottom line, we will have this fund launching before the end of June, I believe, and it will be based on traders found in, through Fund Seeder, and so Fund Seeder becomes an avenue where people who have the ability to trade and would be interested in managing money, but don't have access to, don't have the pedigree, don't have the acquaintances, are in the wrong country. Whatever, and they can be in any kind. In fact, most of the people in our original portfolio are not U.S. The majority are not U.S. There's a good representation. Probably the majority are, oddly enough, in the U.K. Right. And then, like I say, there's one from the Czech Republic, there's one from Hong Kong. But that's the thing. We could be global, because that was the whole the site was to be, it was a central global center point where traders from all over the world could put up their results, track or link their accounts, and could be discovered and have an opportunity. So on the one hand, it works for us because we can tap into this undiscovered trading talent and hopefully make money, via investment vehicles or connecting them to investors, and on the other hand, it's great for them because they get an opportunity they never had. Or would have. And that's Fund Seeder. If people are interested, they can just check out, FUND Seeder, SEEDER.com.
Fundseeder.com. Yeah, well, I'm sure a lot of our viewers will be going across there to take a look, Jack. And it's really interesting, again, going back to my teaching side, I always say, none of this stuff that we're teaching you is like real rocket science. You can become successful with that. I mean, you need a brain, right? You need to be able to understand what's going on, but none of it's rocket science. And some of the best traders I've seen have come, particularly through the futures exchange, the life law where I started off my career. A lot of those guys didn't have significantly strong academic backgrounds, some of them far from it, but yet they had something that is within those personality traits. And as you say, it's not necessarily aggressive or calm, but there's something in there that made them successful. And it's not about, otherwise all the most intelligent people in the world, all those guys from Princeton and, Oxford, Cambridge and Yale, they would all be, multimillionaires, and they're not all multimillionaires. I mean, some of them are, but not through trading, right? So, and I think it's a great project, and, and hopefully it's giving people opportunities at fundseeder.com, as you said, fundseeder.com, to be able to progress themselves, who wouldn't normally get the opportunity. So I think it's, it works on a social side as well as on a business side as well.
Yeah, well, it is a social, in fact, the fund is going to be called the crowdsourcing fund, So.
Right. Cool. Well, look, Jack, it's been an absolute pleasure, as I said right at the beginning there, reading your books back in the 90s certainly changed and re-energized really my whole perspective with respect to financial markets and from where I was to where I ended up. So I thank you again for that. I thank you for taking the time to speak to me today, and to speak to all our viewers. And I wish you well with fundseeder.com.
Hey, thank you very much. Nice speaking to you. Good luck. Take care.
Jack. Bye.